Welcome to this new idea, premise, platform I'm going to do. I'm well aware that I look like a wizard. Not a wizard sleeve, hopefully. And it's to do a daily rundown of news that's happening in the North. How I think that's going to affect the North in terms of business, finance, investment, as well as looking at investments outside of the North and the UK overall and overseas that will affect the North either directly or indirectly. Now, it's a new premise. I'm going to try and do it as nearly every day as possible, but obviously schedules and so forth might get in the way of that. So, we will try. But how I will do it is run down various little sections. One for a northern strategy, things that are affecting it. Industrial clusters, so big news that will affect the areas of the North. Again, either directly or indirectly. Capital investment that's being pumped into the economy of the North or being taken out. And institutions and power of changes either in government or education that will affect how the North is run. And finally, builders and leaders. Spotlight on a few leaders in the North that have done some things in the last 24 hours, or news has come about in the last 24 hours. And then future models to look at broader context, as well as infrastructure and some future updates internally that we'd like to share. So, the first few will be scrappy as hell. I'm not really a video person, but you get my wonderful wizard-looking face anyway. It is cold. It is January. We are in the UK. Of course, it's bloody freezing. So, hence this fine attire. So let's look at what's been happening in the last 24 hours in terms of news. So obviously that'll cover Friday because we are on a Monday. Now, if you've been living under a rock, you will know that over the last 2025 was a difficult year for many businesses for the economy in terms of government policies, how taxes, and that delved into a lot of uncertainty. Now, what I'm not going to do on this series is focus on the negatives and be all lull and oh shit, what do we do? You know, I will be looking at the things that are affecting it, but this isn't a place to kind of shit, what do we do? Negativity, blah blah. It's the I hope anyway that I can look at the things strategically, use that data, and then look at how we can move forward together as business leaders and so forth. So let's look at the first one. Now I'll bring in other screens here because this is like a report that I've got ChatGPT to run for me on a daily basis. It's looking at certain different aspects, but obviously browsers and what we do, I'll find other bits outside of this report as well. So I'll give you a brief rundown of the things that it's scouted for me under the remit that I've asked it for. Then I want to cover I could cover a little section on AI and how that's kind of affecting the economy of the North and the UK overall, really. But we'll come to that in a second. Northern strategy, business confidence at a multi-year low. Recent surveys show UK business confidence has fallen to its lowest level in 3 years, driven by the rising cost pressures, weak demand, and staying price increases. Fewer firms expect turnover growth, and a majority now anticipate rising prices over the next quarter. Now, I did do a video. No, I did on my newsletter of how, yes, 2025 was a tough year, and how 2026 will see a lot of those trends continue, but that doesn't mean that there isn't a lot of opportunity available. I will link that below when I post the video, and you can see it there, because there is a hell of a lot of opportunity. You've just got to navigate it differently to how we have been doing. I digress. But why this matters to the North, with the lull that I mentioned, the North's economy is SME intensive. In fact, what was it, 90 odd % of the entire economy is SME. So local services, manufacturing, hospitality, who have been seriously kicked in the bollocks over the last God knows how many years, and especially in the last 12 months, that's a big, huge chunk of our GDP. And obviously that brings a bit of sensitivity and confusion and uncertainty towards the outlook of that. It brings about weaker confidence. Obviously that leads to reduced hiring, cutbacks, less investment, and lower local demand, which can slow growth momentum in city regions outside of London's financial gravitational pull. Saying that, even London's feeling it. But they feel it in a different way, because obviously they are structured in a different way. Right. Industrial clusters. Lindsay oil refiner asset acquired by Phillips 66. Now, this is great news and it's bad news. Great news in the sense that it keeps jobs going. Increases the jobs market within the area, which is North Lincolnshire. But because it's the asset company is situated outside of the UK, what I foresee things happening there is selling off a lot of assets and offshoring a lot of that. Well, not offshoring, selling off a lot of the assets and removing a lot of that potential and money at the end of the day outside of the country and outside of the area, and it won't get reinvested back into the area, which it's obvious how that affects the community and the country. So, like I say, short term, great news. Long term, we'll see on that. Just a bit of information there. Lindsay was once a key part of the UK's refining capacity, not anymore. The asset acquisition preserves capabilities and safeguards jobs in the short term, which is just what I was saying. Guaranteed till March 2026, so that's only 3 months. Now we'll keep a clear eye on that, but I foresee a lot of things being sold off in that, which will have a huge impact on the area, unfortunately. Capital investment. Teesworks Regeneration pays a record dividend. Now, this is not good for the area, because the Teesworks project is a large private regeneration initiative in Redcar and Cleveland, paid a 30 million dividend to shareholders in 2025, despite only profits of 4.2 million, which shows they are offloading assets. They foresee a few problems coming up. So that means the investment will be null and void, which means they won't be expanding, which means there won't be more employment within that company for the foreseeable. I might be wrong about that, but we shall see. Projects of this scale paying dividends under weak operational results signals capital allocation tension between private return and public mission. areas. So let's have a look at institutional power. Weaken business confidence. Institutional challenge. The BCC survey shows a significant share of companies cutting back on investment plans, which is what we was kind of covering before. Lowering growth expectations and planning price hikes. Now, we'll come back onto that in a second, because there's a couple of areas that I want to cover on that. And it's looking at the short-termism of outlook. Yes, in the short term there is going to be a bit of an affected challenge, but in the long term, and if we navigate the 2026 accordingly, I foresee a hell of a lot of opportunity. Late 2026 and early 2027. Let's look at. Let me bring it up here. My new Windows. If I can find it. I've got that many bloody windows open. Where the hell are we? Where the hell are we? Somewhere on here. Just pause that, just so I'm not, rummaging through a load of windows. Right, so this is what I wanted to come on to. How the UK's AI startup scene is thriving, which is amazing, especially when you go into the data. As American tech giants promise to spend big in Britain following Trump's state visit, investors share their view on the UK's AI and tech sector and discuss the thriving startup scene. The thing it's funny with Britain is because we can't afford or run data centers at scale due to energy costs, but we've got the most exceptional talent here in the UK. So it places us in a peculiar but incredible position in that companies all around the world are are crying out for the talent and the abilities that we've got here in the UK. We lack a hell of a lot of the infrastructure there to kind of service that. So what ends up happening is a lot of those people that are skilled, talented, think strategically and outside the box for those sort of areas, then they're getting talent scouted way outside of the UK. With remote working, that's brilliant because a lot of the people stay here. Not always. We digress. So let's look at this. That's what we was covering a few months ago. Huge pledges, 22 billion from Microsoft. Blah de blah de blah. Now, this was what I found interesting. Registered offices of AI companies by region, which is the artificial intelligence sector. That's up to 2024. But it's incredible. The growth of our AI companies outside of London is more symbolic. It's essential for resilience, inclusive growth. What a weird way of phrasing it. Bringing together local universities, local infrastructure, and local demand to create several decentralised hubs of innovation across the UK can further fuel this growth. 2.9 billion of investment in British tech is the starting line, and more to come. Now, that's towards the late thing. Let's look at this capital gains side and how they are. How can I put this? They're putting a hell of a lot of money. A lot of money is being invested into the UK from investment companies, venture capital from outside of the UK into the talent and the opportunity that's being made here in the UK itself, which is incredible. And this is what I was saying before about the opportunity later down the line and why people need to do the work now in order to profit and have exceptional growth later in the year. This year is going to be difficult to navigate, not just because of two prongs, really. The uncertainty in the market is a big thing. It's a big factor. There is also the shift in business, certain aspects of business because of AI. So it's creating this unique pivot, I guess, in how the market and businesses are conducting themselves. With those big shifts always comes opportunity. And that's kind of what I want to cover here. So the UK's venture capital market enters 2026 at a pivotal moment, with AI, deep tech, health, fintech and climate continue to draw strong investors' interest, cementing the country's position as a hub for early stage innovation. Now, there's a hell of a lot of opportunity there. There'll be a hell of a lot of investment coming into the UK. The struggle is how that capital is raised and who's raising it, or who's offering the money. Because if you do big venture capital, then that means that money goes out of the country and out of the area. If you focus more on family offices and things like that, chances are it's more inclined to stay on UK soil. But that's something we can cover on a separate video, I think, because I think that needs a big discussion. Because in order for the growth to be sustainable, then obviously the profits and the money needs to get reinvested into the areas. But we'll come to that another time. I'm doing a lot of that. We'll come to that another time. I think there's just that much I want to cover. Yeah. So, according to Alistair Moore, investment director at PXN, the leading venture capital firm in the north of England, Scotland and Northern Ireland, the VC market in the UK has experienced a clear shift towards sectors like AI and deep tech. AI has been a huge draw for UK venture capital this year, attracting about 30% of investment in H1. But other areas like health, fintech, climate and deep tech are holding strong. That is when the rest of the market was seeing a shift and a lull and a huge struggle in 2025. But those areas are seeing a huge increase, not only in investment, but in terms of productivity, in terms of growth, which make of that as you will. The increase in deal flow and the ability for companies to secure larger rounds at earlier stages signals a healthy and competitive market. Investors are backing companies that have a clear story and strong sector focus. For instance, PXN recently closed a complex $7 million investment in just 10 weeks, proof that good companies and compelling narrative can move quickly. That 10 weeks for $7 million is incredible. Usually it takes months and months and months. Good. Across Europe, sector-focused funds and corporate VCs are active and many companies are looking to scale closer to home given uncertainty in the US. I think we covered that a little bit there. No, I think it's important to look at that. The more cautious investor sentiment. Despite signs of growth in certain sectors, particularly with increased interest from US-based investors, Rahul Parekh, partner at 2150, a VC firm investing in technology companies that seek to sustainably reimagine and reshape cities and the industries that power them, offer a more cautious outlook for the UK VC, which they obviously would because they're more focused on the infrastructure rather than the things outside of the infrastructure. He explains that while there are still high-quality opportunities, the overall sentiment from limited partners has become more conservative in recent months. There's a much more cautious LP sentiment around fundraising, and capital is flowing more slowly into the market with a greater emphasis on quality and focus on exits. Good and bad. Good in the sense that the investments are there, but bad in the sense that you got investment firms coming in looking to raise, increase, exit. Make of that what you will. Parek's comments reflect a broader trend seen across the UK in 2023 as fundraising slowed significantly. A recent report by S&P indicated that UK-based private equity and venture capital funds raised more than 50% less in 2025 compared to the previous year. Now that's the overall market. We are focusing here on the AI and tech market, which is increasing, and that is partly due to the AI trend shifting anyway, partly due to the talent that we've got here, but the fact that it's increasing despite the general markets decreasing is, I think, somewhere that you need to pay attention to, look closely at, and make your decisions strategically from that point of view. So that is today's edition. Like I say, I will try to keep these up on a daily basis. I'll obviously find my feet better as I do them. But thank you for watching. That's today from Leroy, you wizard. What?